Let's bring on board the management of NTPC Green. Their IPO will be opening on the 19th of this month, will be open till the 22nd. We're chatting with Gurdeep Singh, CMD, and Jai Kumar Srinivasan, the Director of Finance at NTPC Green. Thank you so much, gentlemen, for joining us. And Gurdeep, my first question to you is, what would be the usage of the IPO proceeds once the IPO floats through? How do you plan on mobilizing and deploying these funds?
See, this IPO proceeds will be utilized for the capex requirement for ongoing and forthcoming projects. This is the dilution, it's a new shares issuance, and there is no OF kind of selling of the shares at this stage. So we have come for IPO for the raising 10,000 crores of the initial public offer.
Okay, Mr. Srinivasan, are you worried about how the street is going to be responding to this IPO given the kind of market timing that you have floated your IPO in? We've had recent listings that have not done exceedingly well on the street. So what's your view on that? And are you worried about how the street is going to respond?
No. We are not at all worried. We have kept a price which is appropriate to the current this thing, and it also reflects our growth potential in this. And just now CMD had explained what is the kind of growth that would be the company would be achieving, and so we find that it is it's a well thought out strategy for pricing the IPO.
And let me add one more sentence here, that we had kept the pricing band after the complete due diligence and thorough discussions with the various investors, and the response to what is coming out. In fact, this is the very fair value what we have kept, and the initial investors should be benefited in the long run.
Okay, and the company has registered a revenue CAGR of 46.8%. You have operating EBITDA CAGR at 48%. Your PAT CAGR is also at 90.75% over the course of FY 22 to 24. Are you confident of these numbers sustaining going ahead, and what's your outlook on the numbers in the future as well?
Continue with the same trend. In fact, this business will have an operating EBITDA margin of anything about 87% to 90%. So we'll continue to sustain this, and we'll also ensure that our business modeling is such that we continuously improve both the performance as the bottom line.
Okay, and Gurdeep, also help me understand, where will the nuclear, hydrogen and ammonia capacities lie? Will it be with NTPC or with the renewables arm, and what portion will they form of the overall capacity pie then?
See, as of now, hydro and nuclear is not the part of NTPC Green Energy. The NTPC Green Energy is on the 4 pillars, and those are solar, wind, storage, whether it is battery, whether it is PSP, and we are also working on the thermal storage and the carbon dioxide based storage system. Let's see how fast we can work on that. And going forward, there will be green molecule which will be coming into this, which may include green methanol, green ethanol, DME, sustainable aviation fuel, and green ammonia and so on. So those things will be housed in the NTPC Green Energy Limited itself. Just let me share here that we are working on our hydrogen hub in Andhra Pradesh, which is place called Pudimadka, which is near Vizag. And we have already have the land of around 1200 acres, which is coastal location, and this is being developed as a hydrogen hub. So apart from nuclear and hydro, all non-fossil will be coming towards NGEL.
Okay, and lastly, my question to you, Gurdeep, once again, the competitive intensity in the sector that you operate in is increasing. How are you going to ensure prudent bidding going ahead for all the future projects, and what's the outlook on that front?
See, we had been very conscious, as you know, that we are a public sector utility and our actions and our decisions are based on the very thorough analysis, and we document each and everything. So, we will never be kind of just putting some bid which is just for the sake of grabbing the project. But at the same time, we don't expect that we will be trying to have something very, very high bids and which is going to really pinch the consumers. So we always have a very sensible and the good healthy returns on that, whereas we are maximizing the returns, but at the same time we see that the project remains viable throughout, and it is well received by the off-taker.
Okay, on that note, Mr. Singh, Mr. Srinivasan, thanks so much for taking the time out and chatting with us at ET Now. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.